Hello and welcome to Market Watch for another week, and I would be remiss not to highlight everything that we've been talking about for the last 2 weeks. Before I go any further with any of that, we do want to point out very clearly that we are working very, very hard as we possibly can actually, to continue to keep you updated with what's going on in global markets, to trying to continue to update you that we understand that the decline that's happened, particularly over the last week, is hurting. We understand that completely. We too have skin in the game and we too feel that pain. You need to look through it and you need to think about this from a long-term view, and that needs to be the start point from this in terms of how we look at Corona and what it means with regards to your investments long-term. And that is the term. Do not forget that, long-term. Very quickly, I want to start you with this chart here. This is from the bottom of the last correction that the ASX had to the top before the correction we've just had. And you can see it's 30% on the nose on a capital. It's 35.9% in total returns. So that includes your dividends, which is from the 24th of the 12th, 2018 to the 20th of February, 2020. You've got to look at it from the point of view also that the previous correction, the one that this preceded, was actually down 14%. So we're talking about basically a doubling return in terms of where it is. But it's not just looking at that last one. Here is a chart here of all of the corrections and bear markets that we have seen over the last 20 to 25 years. And again, very clearly have a look at those pink sections. They are the corrections. And then have a look at the green ones. The green ones show you pretty much every single time after a correction, there is a very, very strong, slow and steady, and that's the word I would probably use, actual appreciation. And if you look at that chart, what it also shows you is that from the bottom of the last 20 years to the top, including last week's decline from Corona, it's up over 400+%. And that's how you've got to address this. It's how you've got to look at it in terms of what's going on. Yes, there is fear. Yes, the market is falling. Questions around supply chains are going to be there. The numbers coming out of China show that they are going to slow. That is clear. But what it also needs to be reminded about is that over the longer term, China will bounce back. And that needs to be pointed out very clearly. The Chinese will not want this to drag on. They will not want to see a recession in their country, and therefore there will be a snapback. And it could happen as early as something like May. The other thing about this, and what I now need to show you as well, expectation of a rate cut from the RBA for Tuesday is now over 100%. And that's what this is showing you very clearly from the probability from Reuters. But I also want to show you this as well. It's a little bit messy, I understand, but have a look out at what's going on at around about June, July. It's actually now suggesting that we could see rates as low as 0 probability in July. And that's an astounding thing to say. It also therefore suggests one other thing you need to remember about all of this that's going on. Markets overreact. And they always have and always will. And that needs to also be part of your thinking with regards to everything that's going on right now. It is overcautious, overdone in terms of where it's going. Does it stop tomorrow? Does it stop in a month? That's a great question. And we'll answer that honestly. We don't know. But what we do know is that the market will return. Over the longer term, the returns that you're going to get from being in the markets will well and truly outstrip cash. And even with the current volatility, that is also our number one mandate and our number one belief, and we continue to stick by it.